Welcome back again, ladies and gentlemen. In this section, we're going to be looking at market maker cycles. We're going to be looking at them from intraday, intra-week, intra-month, intra-4 months, which I refer to as a quad cycle, the intra-year, intra-5 years, and the 20-year cycles, and also see how we can properly incorporate levels in our trading uh, as far as market makers is concerned. So let's get right into it. So we need to understand the market maker cycle very, very, very clearly. So the first thing that you need to understand that it has sort of like department. It's a four-part cycle. So the first part is the accumulation phase. The second part is the stop hand phase, and then the long sustained run, which is a unidirectional move for 2 to 3 days in an intra-week cycle, or 3 to 4 week or 4 to 5 weeks in an intra-month cycle. So and the lastly the reversal, which is where we do our counter trending and or proper market maker exits. So we have four or right now in all these cycles. How many cycles do we have? 1 2 3 4 5 6 7 cycles, but we have 7 cycles, but we're only gonna look at three major cycles, or to be specific, two major intra-week and intra-month cycles, because these are the two cycles that we will be most interested in trading from. So but then we're gonna also look at intraday, because we cannot trade only looking at intra-week. We should be able to take positions looking at intraday charts. So let's go back into it. The first thing is the accumulation phase, the stop hunt, the long sustained run, and the reversal. You want to, when you see a market ranging, that is where you should, start looking at where, like, market, if ever is it accumulating, what day of the week is it, and then what time of the day is it? Is it like an Asian session? Is it like you should know when the market is accumulating, when you should expect stop hunts, the long sustained runs, or maybe when you're late, perhaps, then a stop hunt has already occurred, and then the long sustained run has already established. You should know which levels, how you can trade, or maybe how you can get into a trade even if you late and then a stop hunt has already occurred, because the main point is being able to enter at a stop hunt, you understand. But you also can be able to enter, given that you understand the cycles, maybe that this is the beginning of a long sustained run, and then you should enter after having noticing maybe certain candlestick formations that confirms maybe that the cycle has already begun, and then lastly the reversal. So it's the accumulation phase, first 7 hours of the day, which is the Asian session on an intraday cycle, and then the first day of the week, which is Monday, as accumulation phase of the intra-week cycle, and then the first week of the month in an intra-cycle, it's an accumulation phase of the whole intra-month cycle. The stop and phase, it's London session, the beginning of the London session open, or maybe London open, first 2 hours of the London session or the New York session, the Tuesday or Wednesday, which is intra-week cycle, or week 2 or week 3 of the month, which is an intra-month cycle. Then the long sustained run and the reversal. So I don't want to get much into it. I just want to show you and demonstrate the things that I'm talking about, looking at different cycles. So we're gonna start with the intraday cycle. So an intraday cycle is basically very easy. Like, as you've seen, I told you about the accumulation, the stop hunt, and the long sustained run and the reversal. So this is the accumulation phase in the intraday cycle. This is the first 7 hours of the day. This in South African time. So this is 12 o'clock in midnight, and then this is 7 o'clock in the morning, and then I'm expecting to see my stop hunt after the US closing. So between half past 8 and 10, that is where I wanna be. That is my precise entry times. So at the same time, when you know where the stop hunt is likely to occur, you also need to be very precise as to what time you should make that particular entry. So around these zones, I would identify a zone where the stop hunt is likely to occur, which is 25 to 50 pips above the Asian range, like here, like the way it's showing right now. This is a stop hunt because everyone that has sold share, retail traders probably put their stop loss 25 to 30 pips above the previous high. So in these areas, I know there's a high probability uh, area for me to take a short position. So it's the same thing that happens here. You see, we use a lot of confluences, so I'm still gonna get into this moving averages as to how you can also, incorporate them as entries and exits. So there's another scenario. As you can see, accumulation and then a London open stop hunt and then long sustained run and then price reversal, New York session. Accumulation stop hunt. We have different types of stop hunts, ladies and gentlemen. So this is an outside structure because the stop hunt is outside this accumulation phase. You understand? So this highs and lows, if ever a stop hunt has occurred and is above the previous high, which is the high that is within the Asian range. So that's an outside structure, or maybe outside structure stop hunt. So this is an outside structure. There's an outside structure, and there's an inside structure stop hunt. London stop hunt. So after accumulating in the morning in the Asian session, we got an inside structure stop hunt. It was a very good stop hunt because we got sort of like a lot of confirming candlestick formations there. Then we got tweezer bottoms, if I can call that, and then a little or a quick sharp spike to the downside, and then coming back. I could say this are all retracts. You understand? So long sustained run and then reversal. New York Open, the price reversals. So I'm also gonna show you a lot of something. So in this case, we also got a stop and high, and then uh, the price went down for a little while, and then New York Open price rallied. So with this, I just wanted to show you how important it is to have like very precise timings as to when you wanna take your positions. You shouldn't just enter prematurely. Wait for proper timings. And then here's another good inside looking outside structure stop and high at a good timing between half past 8 and 10 o'clock in the morning, just 2 hours after London Open. So accumulation, stop and high, and then drop, re-entry again, and New York Open, and then we got paid. Accumulation, stop and high, structure, and then long sustained run, we got paid. So before I move into intraweek cycles, let me show you more of this intraday cycles. I'm just gonna go to the flashcards for all I have intraday cycles here. There you go. Accumulation, stop and long sustained run, reversal. Same thing here. Accumulation, stop and high, long sustained run, reversal. After reversal, price comes back into consolidation. Accumulation, stop and long sustained run, reversal. Accumulation, stop and uh, not long sustained run, a shallow stop hunt. But then remember, this was against the trend. I would also encourage you not to trade against the trend. If ever my bias is long and then the price issues a stop and I wouldn't take it. I would instead wait, and then later in the afternoon I know I would get something from the New York Open stop hunt. So if ever I got this in the morning, I wouldn't enter a short position. I would just wait, and then until I get the proper market maker entry, New York Open, accumulation stop hunt, the beginning of last long sustained run. This is like first it's a level one safety trade because there's an anchor point. So this is a flag, small flag here. You can, if you go to this is a 15 minutes time frame. So if you go to 5 minutes, you'll be able to see. I don't like trading anything below 15 minutes. I feel like scalping. I don't like scalping. So this is accumulation stop hunt long sustained run. Accumulation. I'm not gonna say stop and low because there's a very clear downtrend. You know how you see how the moving averages has crossed over. So there's a stop and low, but then not for me. For somebody else that doesn't trade, that is not trading in line with the trend. So for me, it's a false move, and then proper stop and high. It came back. It touched those highs three times, one, two, three, and then it issued pins there. So you see how price wasn't able to break and close above those previous highs there. It only did, gave us spikes signifying it is a sign of reversal. And then if you also look at your candlestick formations, you also see a bearish engulfing candlestick pattern here. And then it's also sort of like an evening star. So this is a very good high probability entry area. So when I see something like this, I take it and then I maximize and then make a whole lot from it. So I think that was it for me. You see how this is also. Let me just pause this right. So as far as intraday cycles are concerned, you just need to know where to properly enter at what proper times. Like for instance, if ever you entered here in the morning and you get stopped out, you should know you should wait for the New York session. So for instance, for me personally, for to be able to enter into such a trade, taking a shot, continue with the shot, the berry trend, I first need to enter here at London Open, and then if ever I get stopped out, if price comes back and takes me out, I know I definitely need to be here for my shots between half past 2 in the afternoon and 4 o'clock in the afternoon. That is the New York Open South African time. The intraday cycle is very important. You should know how the cycle is and then when to enter, because people will enter prematurely. They don't know where the cycle how the cycle is. They don't know when to anticipate stop hearts and so forth. So let me just go to a chart real quick. Uh, this is the intraday cycle, the New York Open stop hunt, and then London stop hunt, New York reversal. London stop hunt, because from here until here it's London session. So this is London session stop hunt, and then we also got a nice stop hunt here. It's just a pin just to stop everyone that has stop losses around these areas. So for me, I would have my stop losses, or not stop losses actually, pending orders around those areas as well. So I would also take another short position. I would enter here, around this area, right on that pin there, and also take another short position there, probably around these areas as well. Take another short position, and then as price falls, and then I'll just move my stop losses accordingly. If ever I get taken out, I'll be taken out on break even, or on profit, or when having a book profit. So I just wanted to show you that it's very important for you to know the stop hands, or actually the intraday cycles. So secondly, we're gonna move forward now to the intra-week cycles. So let's go back to our slides. This was the intraday cycles. So I believe right now we clear as to how the play out of the market maker cycles on the intraday cycle, on the intraday outlook is it's clear. Basically, I don't know how to put it, but I hope you understand that. So moving right along, we're gonna go to the intra-week cycles. So it's the same thing over and over again. It's the accumulation, the stop hunt, the long sustain run, and then lastly the reversal. So here we go. Monday is the accumulation phase, and then Tuesday, Wednesday stop hunt, long sustain run, Thursday, Friday reversal. Monday accumulation, Tuesday stop hunt, long sustain run, Thursday reversal. Monday accumulation, Tuesday, Wednesday stop hunt, long sustain run, Friday reversal. Monday accumulation, stop hunt Tuesday, long sustain run, and then reversal on Friday. On Friday rather. Accumulation Monday, Tuesday, Wednesday stop hunt, long sustain run. Accumulation Monday, Tuesday stop hunt, long sustain run. So let's look at further more examples of the intra-week cycles. So we have a lot of intra-week cycles. As you can see, I've done my work. So let's start with AUD USD. There you go. Monday accumulation, Tuesday, Wednesday stop hunt, long sustain run. Same thing here. This is just we didn't. This is a straight away trade. So a straight away trade. For me to take a position, I would wait for something like this. If ever I don't get any significant patterns, then I would wait for maybe a moving average crossover and coming back to retest the crossover. Monday accumulation, Tuesday, Wednesday stop hunt. This is a perfect intra-week cycle. Monday accumulation, Tuesday stop hunt, Tuesday stop hunt, long sustain run, accumulation, stop hunt, long sustain run, accumulation, stop hunt, long sustain run, accumulation, shallow inside structure, stop hunt, long sustain run, uh, accumulation, stop hunt, long sustain run, accumulation, no stop hunt whatsoever, breakout coming to retest the previous resistance and support, then long sustain run. So you see how also it's important, so, for you to also know your technicals very well, because even if you don't know your technicals, you're not gonna be able to take advantage of such a position, because uh, somebody might take a short position here, but then for me personally, just looking at this moving average, I can see that it's giving me a behavior of an uptrend. So the way the moving averages are lined up together like this, I can see it's a continuation of a trend that has been coming going upwards. So my bias, it's long, because you know that I trade in line with the trend. I don't compromise with that. So accumulation, stop on Tuesday, Wednesday, stop on long sustained run, Thursday, Friday, reversal. Stop hunt, long sustained run, Thursday, reversal. Accumulation, stop hunt, but it's an inside structure stop hunt. This was London Open, and then long sustained run, Thursday, Friday, reversal. There we go. I think we forced enough of Australian dollar USD. Another one, Euro CAD, accumulation stop hunt, long sustained run. But then this is not actually long. This is an inside. This is an intraday stop hunt, and there's an intra-week stop hunt. So for intraday, yeah, you're on point. There's an a stop hunt, New York Open stop hunt, and the long sustained run intraday. But then this is actually this intraday long sustained run. It's an intra-week stop hunt. Tuesday, Wednesday, stop hunt, long sustained run. Tuesday, Wednesday, stop hunt, long sustained run. Thursday, Friday, reversal. Tuesday, Wednesday, stop hunt, long sustained run. Yeah, man. So I just wanted to show you how this thing is consistent. You just need to be able to identify it, and then when you see it, have the confidence, the courage to take it. Then the proper way to enter here, London Open stop on Tuesday, enter here the following day, continue with an uptrend, enter here again, and enter here on Friday, close on New York Open, because this was London Open, it went up New York Open, and then later, after 2 hours, it closes Friday, after 1, 2, 3, which is the 3 levels of rise, 1, 2, 3, 4 days of rise. So accumulation, London stop and high. You know, you don't take this because you know the trend. It's bullish or it's bearish. So just make sure that your technicals are in order for you to take any position. So let's look at another example. Euro GBP. I don't like Euro GBP, but then we can just look at it anyway, just to demonstrate that it's not only dollar that is very consistent with market makers. There are other pairs that you'll be able to profit from them trading in line with market makers. Thank you. So accumulation stop hand. This is a Mona Lisa for me. This is a signature trade. When I see this type of a setup, and it's New York Open, and it's Tuesday stop and high, it's the second week in line with the trend, and it's on moving average, and then it's showing me signs of reversals, like reversal candlestick formations. I take it, and then I hold it, and then I maximize out of it. These things are very consistent. Accumulation here. This is continuation of the accumulation. So this is a proper stop and intra-week. Level one safety trade, level two safety trade, and then reversal there. So after taking a short position here, you would re-enter again at this area after 50, 200, and 800 moving average crossover. This is level one safety trade. It's a beautiful trade. It's one of the safest trades you can take. When you see something like this, it has a lot of confirmations and confluences. You take it, you maximize, you open 5, 10 standard loss positions, you make 50, 100 pips and make 15, 20, $30,000, and then you're good. So accumulation, stop hand, long sustained run, level 1, level 1 safety trade, level 2. We only got level 2, 2 levels in 3 days, 1, 2, 3, and then it's Thursday. This is New York Open. So if it comes, it gives us this, and then you're not able to take it. Don't enter prematurely. Wait for sort of like a retracement or second leg. You get it, you kill it. There we go. You just need to have variations. Know how to see how it can form differently, because it's not gonna be the same every time. Accumulation, continuation of the trend. Not trend actually. Accumulation, stop and low intraday, and then there's an intra-week stop and Wednesday stop at high as for intra-week level 150 trade correction, which is level 1 safety trade, level 1 safety trade, level 2 safety trade here, then level 3. There you go. Then what else? Euro GBP, Euro USD. Yeah, so that's it, ladies and gentlemen. I just wanted to show you how you can be very profitable even if you trade just intra week, not intraday. Because when you trade intraday, then you are forced to look at your charts every day. That's not what we want. Remember, the other important reason why we are trading is because we want freedom. We want freedom to do other things and explore and travel and spend time with our families, loved ones, our partners, explore the world, buy things that we couldn't buy before and so forth. So I don't prefer to trade every day, look at my charts every day. No, 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 that's not how I do it. So because currently I also have a lot of positions, in other pairs that I've been holding for the past 3 months, 4 months. Yeah. So that is how as good as it gets, man. So let's go back to your slides. After intra-week cycles, now we go to let's see what comes next. Obviously, it's the month intra-month cycles. So intra-month cycles, it's still the same thing. It's like fractals, same thing happening over and over and over on a small, medium, larger, and then humongous scales. Like it goes over and over. It grows, man. It's very big. So accumulation week one, week two stop hunt, long sustained run. Week three, week four, or week four, week five reversal. Accumulation, stop hunt, long sustained run, reversal. Accumulation week one, week two stop hunt, long sustained run. Week four, week five reversal. Accumulation week one, stop hunt week two, long sustained run, and then week four, week five reversal. Accumulation week one, week two stop hunt low, long sustained run, and then week four, week five reversal. Accumulation week one, stop hunt low, week two, long sustained run, week four, week five reversal. So it's also very precise and very clear. It's the same thing over and over. That is consistency. The consistency, a trading edge, it involves using a lot of things all at the same time. But consistent, it's doing the same thing, just one thing over and over and over, whether it's on a small scale or a medium scale or a bigger scale. So it doesn't really matter. So I'm just gonna go to intramonth cycles right now. Okay, intramonth cycles. There you go. So let's start with South African rand because we're in Africa. So accumulation week one, week two, Tuesday, Wednesday, top band, long sustained run. Week four, week five, reversal. Accumulation week one, then you see we didn't get any. This is a straight away trade because we didn't get a week two stop hand, which was supposed to give us a stop hand high and then continuation with the downtrend. So I wouldn't buy this and say no, but we actually got a stop hand low. No, no, no. I'm only interested in trading in line with the trend. So instead of taking this, I would rather wait for a retracement coming back to retrace this previous support as resistance on the same or on that 50 moving average there. Then I would take a short position. But buying here is very risky. You can counter trend such a very strong trend. Accumulation week one, week two stop and high, long sustained run. Week four, week five reversal. Oh, by the way, this was when Mr. President reshuffled the cabinet and fired who's that guy, the finance minister back in 2017. Yeah, it was very funny. We made a lot of money with this moves, but then I was only able to re-enter around these areas. They're having price having coming and retesting previous resistance and support again. So I could only buy from here, but then it was very awesome, man. We got paid. I love Zuma. When Zuma was here, we used to make a lot of money, man. He used to make the markets trend. So otherwise, accumulation week one, week two stop on high, long sustained run. My ladies and gentlemen, I want you to see how this looks so perfect. Like you were able to capitalize from here. You bought here Tuesday stop and low, rode it until Thursday, Friday reversal, and then exited. You waited for a Tuesday stop and high the following week, which is the week two intramonth stop and you sold here again. You took it short. You took it short. You don't close anything here. You just break even as long as the price keeps going down. You break even. Goes down like that, you break even. But after having noticing a stop and low like this, then you start, taking your stop losses here and then making sure that everything is properly. Because I wouldn't take a long position here. I would rather take a short position after having maybe a retrace or support and resistance. So if ever I sold here around this area, I would, if ever it stops me, I would let it go and then wait for a proper Thursday Friday reversal. So this is my Thursday reversal. We take it short again, it comes back, then the ranges Monday Tuesday gives us a proper Tuesday Wednesday stop hunt, having retesting again the previous support as resistance on that 800 moving average. It's a sell. Level 1 safety trade. Wednesday we re-enter again. It's a high probability area, high probability setup, support and resistance. London open, we kill it again. Put in 10 standard loss, 10 standard loss here, 50 standard loss here. You make 100,000 or a million in like 1, 2, 3, 4, 5 days. It's not something that is impossible. You just need to know. You just need to have the conviction and the courage to take a position when you see it. Let's move further. Accumulation week one, and then week two, Tuesday, Wednesday, stop hunt, long sustained run. And if ever you trade intra week, you don't just take one positions here and then let it go. No, you just leave it, let it run. But at the same time, if you get another re-entry opportunity, you enter it again. Accumulation week one, Tuesday, Wednesday, stop hunt. I kill it when I get something like this on Tuesday, second week. I kill it. I maximize on it heavily, and then the profit that I'm gonna make here is gonna allow me to make enough profit to last me for like 3 months. You understand? So I don't need to trade every day. So if I take positions here, immediately it moves 30 40 pips, I break even, let it run. Then if ever it keeps falling, I know I keep re-entering, and then yeah, man, that's easy. It's easy peasy. Accumulation week one, week two, Tuesday, Wednesday, stop and long sustained run. Then accumulation, stop and sell, long sustained run, accumulation, Monday, Tuesday, Wednesday, stop and sell. Same thing over and over and over. Sometimes I keep repeating the same thing. It feels like I'm going crazy, man. But then I hope now you understand the whole point. So those are the only. Let me just go back to our slides. So these are the three cycles. Let me just go back here. So these are the only cycles that I'm only interested in you knowing: the intraday, the intra-week, and the intra-month. So with all that information, now we're gonna move to let's go to the slide, the actual slide. We're gonna move to market maker entries, how to make proper market maker entries with everything that we've discussed from intraday cycles, intra-week cycles, and intra-month cycles. So right now we want to know how can we enter. That is the main question. Now that we have all that information, so we're gonna look at specific periods like first week or first day or certain time of the day. You understand? So looking at an intra-week cycle, we definitely want to make our first entries between Tuesday and Wednesday because we know we anticipate stop hands between Tuesday and Wednesdays of any month, of any week actually, in any month. So between Tuesday, Wednesday, first week, we anticipate stop hands. We enter looking to trade intra-week cycles, and then Thursday, Friday, Thursday, first week we expect midweek reversal, or Friday, which is the non-farm payroll. So we're gonna get the reversal on Thursday, which is gonna be the market makers intra-week reversal, or the Friday non-farm payroll reversal. You understand? So there's a proper market maker cycle based on the intra-month cycle, first week intra-month cycle. Week two, week three, Monday is accumulation phase, so you might expect to get an entry there. Given that we have some kind of confluences of one in one area, then we might be able to take a position. It's not that we don't trade Mondays. We only trade on Monday if ever there is maybe a high probability a setup that is occurring on one pair or another. Yeah, that's it. So Tuesday, Wednesdays, it's intra-week stop hands. Thursday, Friday, midweek reversals. And then because it's not first week, we cannot say it's Friday non-farm payroll. Remember, Friday non-farm payrolls only comes in the first week of each month. So first week, Friday it's non-farm, and then Thursday midweek reversal. But then other than that, any other week, Tuesday, Wednesday stop hands, Thursday, Friday midweek reversals. And then coming to week four, and then intra-month cycle. Tuesday, Wednesday, obviously it's an intra-week reversal, and then Thursday, Friday it's week reversal. That is in conjunction with the intra-month reversal. So when you're selling on Thursday, Friday on the fourth or the fifth week of the month, then you're selling intra-week and intra-month all at the same time. So I'm just gonna go to the next slide. So with all that, you just need to know you don't just trade because it's only market makers. You also need a confluence of other things like complete price action and structure, support and resistance, harmonic or advanced patterns, simple patterns which are continuation and reversal patterns, Fibonacci extensions and retracements, exponential moving averages, ADR, TDI, and fundamentals. So this brings us to a point to where it's how just to show you how important it is to have your technicals in order, because it's one thing to trade market makers and be consistent and master it, but then it's gonna be another when you don't understand all your technicals. So I would encourage you to understand and master all your technicals before you move into market makers, because market makers it's very simple man and straightforward. So when you know your cycles intraday, intra-week, intra-month, you good. It's always gonna be like that. But it's a complete different story when it comes to technicals, because first things you need to use them in conjunction which is with each other. You can't just trade because it's support and resistance. You need support and resistance to be in confluence with an advanced pattern or a simple pattern or a Fibonacci retracement or any moving average or ADR or TDI. They need to be for me to be able to take a trade. I need to have a minimum of 4 to 5 confluences. You understand? So going to the next slide, we're gonna look at daily trading sessions and times. So the other important thing is to know at what time to trade. Like for instance, when you can just wake up at any given time of the day or night and decide to take a position. No, 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 no. That is not consistency. First thing you need to know what time is it, and then what trading session is in place at that particular time. So around in South African time, the Asian sessions opens in 12 o'clock midnight and close 7 o'clock in the morning. So around that time is the accumulation phase, and we're sleeping, so we're not taking the positions. So when we wake up in the morning between half past 8 and 10 o'clock, that's where we take our first positions. You understand? But then the European sessions usually it basically starts at 8 o'clock in the half past 8 in the morning, and then until 2 o'clock in the afternoon. US session starts half past 2 in the afternoon and ends 10 o'clock in the morning. I hope you will all be able to convert all these times, because this is only a South African time. So South African time, I hope you're gonna be able to convert all these times according to your geographical area or time zone. So the precise trading times, the exact trading times that you should be on your chart, it's 2 hours in the morning and 2 hours in the afternoon. You don't spend all day looking at your charts. You When you wake up in the morning, half past 8 and 10 o'clock in the morning, you on your charts. You trading the London session. You expecting stop hands. You using confluence. You're looking at support and resistance. You're looking at another things like moving averages. You're looking at what else? Let me just go back to the charts and show you exactly what I'm talking about. But before I go to the charts, also New York session is the New York Open between half past 2 and half past 4 in the afternoon. 2 hours in the morning and 2 hours in the afternoon. That's it. You only trade 4 hours during the day. So let me just end this show and go to my charts. So that's it. You trade in the morning. First 2 hours in the morning, half past 8. Here it is until 10 o'clock in the morning. That is where you make your first entries. If ever you don't get what you want, you don't take any position until you get something that gives you the conviction or the courage, or that completes or says to you, now it's time to take the position. That's what you do. You wait until that particular time. So 2 hours in the morning, half past 8 and 10, and again later in the afternoon, half past 2 and 4 o'clock in the afternoon. Half past 8 and 10 in the morning. If you get stopped out, again you'll take a position. Half past 2 and 4 o'clock in the afternoon. Half past 8 in the morning and 10 o'clock in the afternoon. It's very precise. These are the most precise trading times that you should be taking positions. Half past 8 and 10 in the morning, and later again half past 2 and 4 o'clock in the afternoon. Half past 8 in the morning and 2. Half past 8 and 10 in the morning. First 2 hours in the morning, and then again 2 hours in the afternoon. Half past 2 and 4 o'clock in the afternoon. Half past 8 and 10 in the morning, and again half past 2 and 4 o'clock in the afternoon. Another one, half past 8 and 10 in the morning, and then half past 2 and half past 4 in the afternoon. There's another one, half past 8 and 10. Yeah, so it's basically the same thing. So I just wanted to show you how important it is. You can't just trade any time of the day and just woke up in this time of the night. What time is it? 3 o'clock in the morning and decide to open a position. There's the accumulation phase. You see how the market is ranging? It's the accumulation phase. Otherwise, they know if you take a position here, is it gonna put your stop losses here? 25 to 30 pips. There you go, 25 pips. There's 15 pips. So you're gonna put your stops anyway above this highs and below this lows. So they take you out, long sustained run. Then take you out again, long sustained run. So you should be very careful, with that. So let's go back to our slides. So now that we know our precise trading times and at what time of the day is what session, so it's very important to know that you don't just wake up any given time and open a position, ladies and gentlemen. You wait for your precise time. You wait for price to come to you, and then thereafter you take a position. You understand? So it's very important to get inside all this inside your head. So I'm just gonna go back and show you some of the positions that I took looking at this intra-week and intra-month positions. So this is an intra-week and then this is an intra-month cycles. So let me just open one thing real quick. I'm just gonna okay okay see. Now it's cool. I'll just show you. Okay, let me just pause for a minute and then I just want to show you something real quick. So this is what I wanted to show you. There are some positions that I'm still holding on the USD CAD. So I've been holding them for like 3 months. Because as you can see, I've been holding this ones from since third week October. So October, November, December. It's 3 months. I've been holding some positions for 3 months. I've accumulated like over. Okay, let me just try to calculate it real quick. I want to show you the how you can be very profitable when you're trading in line with the trend, trading in line with market makers, using technicals and fundamentals all at the same time. So let me just do this real quick. I don't know what's happening. Katana, what's wrong? Talk to me, Katana. Work with me. Okay, it's cool. So I think it's round about it's 1400 okay 1200 times 2 is 2200 2200 plus 1400 1400 plus 700 to 2100 plus 1400 is 4500. Is it 4500? Yeah, I think it's around about there. 4500 pips from here until trade 7. It's 4500. So let's just say 4000, approximately 4500 pips plus 1 2 3 4, it's 2000, 6500 pips plus 369. So 6500 plus 900, it's gonna be 7400, about 7400 pips. Not 740, 7400 pips. So if you trade in that with only standard lot, that's $79,000. $79,000 converted to South African rand, it's approximately 1 million rand. So it's, yeah, around about 1 million here. 1 million rand. So it's good money. It's not that bad. You can live with that for 3 months. 1 million rands in 3 months. It's good money. So I just wanted to show you how this can be very profitable, and then given that you hold and then let your profits run as opposed to letting you. You know what people do? People let their losses run and then cut their profits short. I'm like, what are you doing? Like, dude, this is very simple. You use confluence of market makers and trend following. The reason I took this position here was because it's a major support area, and it was Tuesday, Wednesday top and low. I took it because it's in line with the trend. I let it run. The following week, I don't take shots because it's against the trend. I waited Tuesday, Wednesday stop and low. I got a Wednesday stop and, but then this was I saw this a little later. You understand? So I was like, nah, I'll just wait for the next day. The following day, I got a stop and low. Thursday stop and low. I was like, nah, it's not going down. It's going up. I bought. It went up. I left it. Thursday midweek reversal. I can't counter trend. I wait for Thursday midweek. Friday. Friday I get an opportunity because it's a major support and resistance area. I had already identified that area, so I basically had pending orders around there. They got in. They got activated. Monday accumulation. Tuesday stop and high. I don't want that. I want the stop and low. They came back again. I re-enter again because I remember when I went in, I had my stop losses there. They were below here, but then when it goes 20 30 pips, I break even, I eliminate the risk. So it came back and then stopped me out and then re-enter again because I had pending orders. After they get activated, I break even and put further more pending orders again. So if ever it comes back and it kisses, we call this the kiss of the devil. It comes and just kisses your stop losses and then goes up again bloody. So this is exactly what happened. But because I have the experience of this, I knew what's gonna happen. So instead of putting my stop losses, I put my pending orders again. It goes up flying. Tuesday, Wednesday, stop and high. I don't take it. Why? Because I trade in line with the trend. Here, I don't know why, but then maybe I wasn't on my charts. I wasn't able to take this opportunity. This today's Thursday, Friday midweek reversal, and this Tuesday stop and loom. I wasn't able to take it. It's okay. That one is loss is a loss. If I'm not able to capitalize, then I don't lose anything either. Let it run. I was in on my charts as well when it came back and retested the same trend line here, and then on top of that, 800 moving over. It's cool, but it went up. When it came back again, I was ready. I couldn't let it run because remember this major support. My first entries was around those areas because okay, in terms of I think this I entered here because it's a 50% retracement. This 38, 50% and 618. So if I should have re-entered again here. No, actually, I had my first entries here and my second entries here. But then what it did, it came back and retested the trend line there. But because when I trade in line, people should also be careful of where you put your stop losses. Preferably, I don't like trading with stop losses. When I trade, most of the time I don't trade with stop losses, but it's not something that I encourage you to do. So you should never trade without stop losses because you know that our account sizes are not the same. So you can compare $100 account with $1,000 account, or maybe a $10,000 account with $1 million account. You understand? You can use the same equity or risk management with a $1,000 account. I might be able to take uh, 2 minute lot positions, or let me see here, and then be able to sustain this negative 60 70 pip drawdown. It's okay. But then imagine with $100 account, your account is blown with just 30 pip retracement, or maybe if the price goes against you for like 30 40 pips, you've already blown your account. So use proper risk and equity management. Do not over leverage. Do not use over trade. Do not use more than you're supposed to. Stick to your rules. Be consistent. Understand? So, but then I took it knowing that it's going long. When it came back again around this area, I had pending orders. It refilled me again because I knew that it was a 200 moving average on 1 hour. So since then, I was not trading for the past 2 weeks. So I just let them run, having knowing that I have broken even, I've eliminated risk and broken even. So I had no worries. So if it came back and stopped me out, I wasn't it wasn't gonna stop me out on a negative. So at this moment, I have about 7,000, approximately 7,000 pips up. It's like I said, a 1 million rands, $70,000. If using a standard lot, so it's got money. So moving, it's 3 month cycles. So October, November, December. So that is how you learn how to hold positions because you know where the trend is going. You know where the trend has been, and you also know where the trend is going. You're not afraid because you've done your research. You know your work. You know what you're doing. That is what I'm trying to instill in you. Knowing when to trade, knowing when not to trade, knowing where to cut your losses, knowing where to take profits, knowing exactly where the price is going to retrace, when and how and at what time. That is precision. That is the trading edge, ladies and gentlemen. So before I close this chapter, I want to show you this 20-year cycle that I was. Cause remember, on this cycles here, let me go back to the thingy. Okay, let me just do that. Remember, I talked about the the intra 4 month cycle, which is the core cycle, intra year, intra 5 years, intra 20 years. But I didn't really cover that. So with this picture here, I call it generations. It's like decades. Like how many decades? It's like 97 to 2017. It's like 20 years. So it's a 2 decade flashcard. So first year, basically within this flashcard, you gotta be able to see intra quad cycle, intra year cycle, intra 5 year cycle, and intra 20 year cycle. So there's a 20 year cycle from 97 until 2017. So accumulation, stop hunt, or maybe extended stop hunt, and then long sustained run, and then reversal here. So we're just gonna start from a smaller time frame. Right now we understand the intraday, intra-week, intra-month. So intra Kosaka, I'm still gonna show it to you, but it's just not here. So if there's a 20-year cycle, which means it's a 5, 10, 15, 20. So this box is 5 years, 5 years, 5 years, 5 years. So within this 5 years, it's like 1, 2, 3, 4, 5. So it's 5 years, 1, 2, 3, 4, 5 years, 5 years, and so forth. So which means this is a year cycle, year cycle, year cycle, year cycle, and so forth. So accumulation, first year inside the 5 year cycle, stop hunt, then long sustained run. In this in 20 years cycle, we have the 2008 US stock market crash. It's over 6,400 pips plunge. So, ladies and gentlemen, these things are manipulated. Somebody knew this was gonna happen, and they made billions out of it. So when the whole world was crying, be like, "Yo, the stock market has crashed. My job, my retirement, and whatnot." Somebody, was having a job. The Rockefellers, were taking a home run. So just know that these things they are very big. They are there. You just need to they just need to be shown to you. You understand? It's always gonna. It's been there for the past 20, 30, 40 years. It's just that now we are able to say it, and then I'm giving it to you like this. So it's you have no reason from now on not to be consistent and be profitable. So we have 2008 August US stock market crash and Brexit here in June 2016. These things, they've been manipulated. You understand? And then the thing is, everything that is in my trading system is also in here. If you look at this is a market maker cycle, but then at the same time there is like not harmonic, a continuation, a simple continuation pattern. Uh, you can say it's a flag or a bearish flag or bearish flag pennant here, and then there's also like a small trend line here. Where okay, first touch, second touch, third touch. So this is support, breakout, and then retest to retest on that support, diagonal support and resistance trend line. And at the same time, it's sort of like accumulation, because this was the first. This is a year, so which means this is the first 4 months of the year. So that was at the accumulation phase in terms of our as far as the intra quad cycle is concerned. So this the spike that occurred here was on the first 4 months of the intra year cycle in 2016, because it happened in June. So first half of the year we something else happened, in the last part something else happened. So it's just that we don't trade very big cycles. But then if ever we were able to go to back into that year 2016, I was gonna be able to show you exactly what I'm talking about. You could have made your entry on that Brexit. Yeah, man. So that is why I was very excited when there was supposed to be a Brexit vote on the. But I don't know. I forgot what day was. I think it was the 12th, the 11th or the 12th of December. So there was supposed to be another voting of Brexit. I was very excited, but then it didn't happen, so it was postponed. I knew the market maker, secret entourage, was gonna get heavily paid. You understand? So this is how you know this thing is very consistent. This was accumulation, stop hunt. Second year, long sustained run. Fourth year, fifth year, reversal. It's everything that we know. Accumulation, accumulation, first year, stop hand, inside structure, shallow stop hand, long sustained run, and then reversal right there. So it's sort of like Thursday, Friday, because it's a 5 year cycle. So it's Monday. These are years actually. First year, this was 97, 98, 99, 2000, 2001, 2002. So 97 accumulation, 98 stop hand, 99 long sustained run. You see how you could have held positions from 98 until 2001. You could have been a billionaire by right now. So from this point onwards, now we know we are very safe. Even if you lose like 5 trades or whatever, but then on a long term basis you're gonna be very profitable because we hold positions for a long term. So that's it, ladies and gentlemen. So let me just go back to your slides. So we've covered intraday, intra-week, intra-month, intra-4 months, intra-year. No, actually, I'm still gonna record on a video that explains the intra 4 month cycle. So we did the intra-year, intra 5 year, and intra 20 years, and we also covered levels because I explained like that. You may find that there is 3 levels for 3 day cycles, 2 levels in 3 days, 3 levels in 2 days, and so forth, or 2 levels in 3 weeks, 3 levels, 3 levels in 3 weeks, and so forth. It's the same thing over and over. Fractals, everything that happens intraday, it also happens intra-week, and it also happens intra-month, intra 4 months, intra-year, intra 5 years, and so forth. So thank you, ladies and gentlemen.